Today, crypto prices fall as trade tensions continue to hamper investors. Shares of GameStop tumble after the gaming retailer announced a potential Bitcoin buying strategy. And Jesse Pollak of Coinbase breaks down the exchange's new partnership with e-commerce giant Shopify. Welcome to CNBC's Crypto World. I'm Tanea McKeel in New York City for the annual Coinbase State of Crypto Summit. We'll talk more about this event in just a moment, but first, crypto prices. Digital currencies are giving back some of their gains made earlier in the week thanks to ongoing trade uncertainty. By noon Eastern, Bitcoin dropped back to the $107,000 level. Ether fell to $2,700 and Solana fell to $157. We're also keeping an eye on two stocks on Wall Street. Strategy launching its STRD preferred stock on the NASDAQ this morning. That offering managed to hold steady around midday. At the same time, shares of GameStop tumbling by more than 20% at noon after the company announced a $1.7 billion convertible note offering that could potentially help the gaming retailer and meme stock buy Bitcoin. All right, let's jump right into Coinbase's State of Crypto Summit here in New York City. Now, in the past, this conference was all about the future of regulation and what the industry hoped it could accomplish with a more crypto-friendly Washington. This year, though, these conversations are all about the present. Crypto regulation that's currently moving through Congress, conversations that these attendees are already having with pro-crypto regulators, and more. It's also a victory lap for Stand With Crypto, which spent millions to elect these pro-crypto lawmakers in 2024. Coinbase also making several product announcements today, including an American Express credit card for its Coinbase One members. You can read more about that in my story on CNBC.com. And I also spoke to Jesse Pollak, head of Coinbase Wallet and Base, the company's Ethereum Layer 2, about one of them, a new deal with Shopify to bring stablecoin payments to the e-commerce giant. Thank you so much for joining me on Crypto World today, Jesse. You made an announcement here on stage with Shopify today, the Coinbase State of Crypto Summit. Shopify is now going to allow payments with USDC on the Base network. So stablecoins are really having a whole moment here. I need you first to break down this announcement. Base is Coinbase's in-house made layer 2 blockchain.
Yep.
Discuss the value proposition for that and then bring it back to this announcement. How does that fit into this new experience that's available on Shopify with USDC?
Yeah, so I think Shopify rolling out stablecoins across their platform is a watershed moment for crypto, where for the first time, stablecoins are fast, cheap, easy, and they're getting rolled out into a real consumer payments experience. You know, Shopify had 875 million people pay on Shopify stores last year, more than $1 trillion of value processed. And now all of those folks are going to have access to stablecoins over the next year. And so for us, this is exactly the kind of real world crypto adoption that we are trying to drive. And when we think about Base, Base is a chain, but really what we're doing is we're building a global economy. Where you can build use cases like this, like stablecoins, like payments, like social apps, really like anything you can imagine, and have it by default be globally accessible. So regardless of where you are, you can tune into this new internet, the on-chain internet, and get to participate with all these new products on-chain.
Okay, so how does Coinbase enter the picture here? So I am shopping online. I want to check out with ShopPay or something using USDC. Yep. How does Coinbase enter that equation? Yeah,
so now it's starting with a limited rollout, and then it'll expand to 32 countries, millions of merchants. There's just going to be a USDC on Base checkout option on guest checkout and in ShopPay. And you can just tap that. It works with hundreds of wallets. There's 160 million people around the world who have stablecoins today, hold stablecoins, and all of them are going to be able to use this in a way that's just as easy as a credit card or any other payment method that they're used to. And really, I think this is day one. We've not just rolled out this consumer experience to Shopify. We've also spent the last 9 months building an underlying protocol with them that takes a lot of the complexity of commerce, all of these moving pieces of making sure you have the right order IDs and part number and discount codes, and brings it onto this new technology platform of on-chain. And with this new payments commerce protocol that we built, we're gonna be able to do a lot more to innovate, to make it so that more merchants and more people have access to best-in-class payments experiences so that they can get the products they want faster, cheaper, and easier.
So historically, the main use case for stablecoins has been related to trading.
Yep.
Of course, now we are starting to see, and I think because of the momentum that we're seeing on the regulatory side, a lot more interest from non-crypto native companies in stablecoins. So Given that historical context and recognizing, as you just said, it is day one, can you talk about the incentive for a consumer to use their stablecoin balance to make everyday purchases? It sounds like we were just having this conversation about Bitcoin and cryptocurrencies just a few years ago, but why use USDC versus like a credit card or even like a Bitcoin backed credit card?
Yep, 100%. So the first thing I'll say is that I think the first 10 years of crypto were kind of this innovation and speculation phase. And that's where you had Bitcoin, you had Ethereum, you had all this new technology emerge. And a lot of the narrative was around, speculation. But we're entering the utility phase right now, where the technology has matured. It's gotten fast, it's gotten cheap, it's gotten easy to use. And that's leading to real world adoption across businesses and consumers. And stablecoins are at the forefront of it. Now, in terms of how and why consumers would adopt stablecoins, I broadly bucket this into two camps. In markets like the United States, where you already have pretty scaled, high-quality payments adoptions, it's going to happen a little bit slower. And people are going to do it because they can earn more yield. You can earn 4.5% right now on your stablecoins by holding them on chain, because it's faster, because it's cheaper, and because it's slowly but surely getting easier than credit cards. And that's kind of half of the battle, and I expect it will take a few more years for us to kind of get full adoption there. On the other side, the really powerful thing about stablecoins is that they're global by default. And so anyone in the world can have a US dollar stablecoin account, and then they can pay with stablecoins. And that is a huge unlock because historically, many parts of the world haven't had access to easy digital payments. And many merchants around the world haven't had an easy way to accept payments for their businesses. And so what stablecoins do is they kind of democratize access, where they're now giving those consumers, they're giving those merchants the ability to participate in this global economy, to save in a trusted store of value in the dollar, to earn from that in terms of rewards, to accept payments in a really low cost, cheap and easy way, and to really participate in the global economy where they can be on a level playing field. And so I think across those two markets, both the more developed markets that have scaled payments adoption already, where stablecoins are emerging as an easy and cheap way to pay, and the more emerging markets where this is just solving a must-have problem, you're going to see massive stablecoin adoption over the next few years.
I want to do a little check-in on Base because that is the product you oversee. How is that going? At this point, who is using it and for what? Is it, geared mostly toward developers or, what kind of, what's the sort of institutional versus retail breakdown? What are you seeing right now?
Yeah, so we're about 20 months into Base's life cycle, and Base is now the largest L2 in the world by every metric. And we're seeing so much adoption across every category, whether that's institutions doing financial activity and trading on Base, or scaled businesses like Shopify now doing payments. There's so much energy in terms of people realizing that this technology is finally ready, and now we can build on it. Now, we've talked a lot about payments. There's obviously a lot of conversation today about finance, but I'd say the thing that I'm probably most excited about is the emerging use cases around the creator economy that are starting to emerge on Base. And really what's happening is that we're starting to see a new social network built on open protocols be built, where you can have an experience that looks like Instagram or TikTok, that maybe looks like Telegram or your favorite messenger, but instead of it being centralized into one platform, and instead of it being a world where if I'm a creator, I put my creativity on that platform, and then the platform makes money, and I don't, it's a new internet. It's an on-chain internet that actually works better for creators, where you put your content into it, and you earn 10 times more. You put your content into it, you own it. You own your relationship with your fans. You can't be deplatformed. And I think this has been bubbling for the last couple years, but just in the last few months, it's starting to really come together. And one of the other things that I work on, besides just Base, the chain, and the economy, is the new Coinbase wallet, which we've actually been building that's going to have this at the absolute center, where we're building a new social product that's built on these open protocols. And I think it's going to be a better place for creators to make money and to be a part of this new global economy.
Okay, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.